If you're a first home buyer, you're 100% going to make these mistakes.
If you're buying your first home, you're probably going to stuff these things up.
Real estate agents, like them or love them, they are there to push that price up. It's as simple as that. I don't care what anyone says, any listeners, well, I'm a real estate agent, I don't do. Yes, you do.
I would remember a quote, he who says the least in a negotiation wins. And
Yep.
that's something I always remember in any form of negotiation. Shut up.
One thing that first home buyers suck at is leaving emotions at the door. Now, what we're going to do is we're going to go through everything from some of the mistakes that people make, I guess, with their lender, so getting that approval, but also how the agents are ripping off first home buyers. So stick around for this one. It's going to be a good one. So we'll get straight into it. The first big mistake, and by the way, there is 5. Actually, before we get into that, welcome to the podcast, Isaiah.
Thank you.
So Isaiah is helping me out today because Aaron is away having a baby, actually. So
Exciting.
Isaiah works with me here at Wise Buy Home Loans and specialises in first home buyers. So great to have you here, mate.
Thank you.
So we'll get into it. The first thing and the major thing that I see a lot of the time is bank statements. So some of the things that really stick out to me, well, one of the main things that I see all the time is gambling. And is that something you've experienced, Isaiah?
Gambling is a massive one, and not just sports bet and online gambling, but also frequent transactions at pubs and clubs late at night out of the ATMs.
So $300 or $350, I don't know what the going rate is these days.
Yeah.
That's,
If there's a lot of them and they're frequent, it definitely raises some red flags.
yeah. So it's not always about what you're spending the money on as well. It's more about how much you're spending. So they couldn't particularly care less that you're having a bit of a punt. It's the amount that you're doing. And I think a lot of first home buyers, a lot of people in general would be surprised to see how much they're actually spending having a punt each month.
Yes.
know,
It doesn't seem like that much at the time, but a couple of bets a week add up.
So I had a guy recently who tried to tell me that he was a professional punter and he actually comes out in front. So his argument was, I spend $1,000 a month and I turn that into $2,000. Why are you penalising me about the $1,000 a month? Now, in that situation, yes, the lender is going to only expense the $1,000 you're spending each month. They couldn't give a shit how much winnings you're getting from it.
Yeah.
It's as simple as that.
Yeah, it's an unknown.
It's an unknown. It's not guaranteed. We can't do it. So some other big things that they look at. So I guess the main thing that they're going to look at, the reason why some of them or most lenders want the statements, it's a bit of a fraud reduction method. So your pay slip says you earn $2,500 a fortnight. That goes into Bank XYZ. They then want a statement of Bank XYZ to show that that amount has actually come in. So it's just to show that. But when you provide those 3 months worth of statements, they're going to look at everything else as well.
Yep. And if you're applying with the bank that you do your everyday banking with, you also don't have the choice.
Correct. So that is another very important thing, actually. If you're applying at CBA or your banking's currently with CBA, you don't have to provide them shit because they've already got it.
Yeah, they know everything.
Yeah, they've literally, it would break down for them exactly how much you spent, and not over 3 months, probably over a 12-month period. So not always a great idea to go down to the branch at your local, if that's who you currently bank with, if you do enjoy spending a bit of money.
Yeah.
So what I recommend people do is a bit of a 3-month detox, if you want to call it that, of just spending stuff all, really clean up your accounts, really clean everything up if you know that you're going to buy your first home.
Yep.
Don't come rolling in there spending, as you said, $350 every Friday night and expect the bank to not notice that.
Yeah. And it's good to start that process when you're just thinking about it, because we get so many people who come in and they've found the dream property and they want to go now. And they had an idea that they wanted to buy 3 months ago, but they didn't.
They don't do it.
Yeah.
So pre-plan. Now, this one actually does cost a lot, like first home buyers, a lot of money. Now, let's assume you've got your finances sorted. We're all good to go. Now you're going to look at some open homes. One thing that first home buyers suck at is leaving emotions at the door. So going in there with a straight face and just going, yep, this is a great house. I'll speak to you later. Most first home buyers, a lot of first home buyers will go in there and mentally move in during the first open home. Like, I love this place. Look at the...
They already see themselves sitting on the couch.
Correct.
Yeah.
They've moved in. So real estate agents, like them or love them, they are there to push that price up. It's as simple as that. I don't care what anyone says, any listeners, well, I'm a real estate agent, I don't do. Yes, you do. You work for the seller, not for the first home buyer coming through. So it is your job that working for the seller to make sure that they get the most possible they can for that sale. And if it's a first home buyer, it's a lot easier.
Yeah. It's they fall in love, and I would remember a quote: "He who says the least in a negotiation wins," and that's something I always remember in any form of negotiation. Shut up.
It seriously is though. So silence is one of the biggest negotiation tactics that I would ever recommend. Is don't tell them anything. So come through the house, even if you love it, you and your partner or you by yourself, get in the car and then say how much you love it. Tell the real estate agent nothing. Oh, yeah, how'd you go? Yeah, it was good. Do you think you'll be making an offer? Not sure yet.
Yes.
Just be really cold and stern with them. You want to be the guy that comes out of nowhere with an offer that they know nothing about.
Yeah, they weren't expecting it.
Like I've bought and sold, and the real estate agent after every open home will give you a rundown of who's come through. They'll go, oh yeah, we had some first home buyers. They love the joint. That's one of the things they talk about is the emotions of the people that come through. Oh, I think this people might have been time wasters, or this one, I don't think they can afford it. This is what real estate agents tell you as the seller when you have an open home. So you want to be that absolute grey man that they go, oh, I didn't really know much about them, to be honest, and come out of nowhere. So some negotiation tips, as I said, be silent and be firm as well. So that then comes on to our next one is number 3 is don't tell the real estate agents your budget.
Yes.
Don't tell them.
One of their first questions will be, are you pre-approved? What
Correct.
would you do there?
Are you pre-approved? Yes. That is it.
Leave it at that.
Yep. You're pre-approved? Yep. Even if you're not pre-approved, tell them you are. They don't need a copy of it. And if they're asking for a copy of it, don't give it to them. They do not need to see your pre-approval.
Yeah, it's not their information.
It's actually not... Yeah, I don't think it would meet privacy laws, to be fair.
Yes.
They don't need to see your pre-approval. They don't need to see how much you are approved for or how much you're willing to spend. So that's the other one as well. So you're going to an open home, you've gone through, you've really loved it. A lot of the time they're going to say things like, oh, where do you see value? Or what do you think this place is worth? Don't tell them. Oh, I'm not really sure.
Yeah.
Leave it very vague. Or they'll ask things like, what's the maximum you're looking to get? And they'll try and spin it so that if you miss out on this place, so I can look at other places for you. They want you to say, oh, look, the maximum we're willing to buy for is 900.
Yes. Yep.
But they've got it out of you by saying, oh, just in case anything else pops up. So, oh, look, we don't really have a max. Literally just...
Vague as you can.
Yeah. I keep stressing this because it costs first home buyers a lot of money when they get the shit squeezed out of them by real estate agents.
Buying property is an emotional journey. So
100% is.
Keep the emotions out where you can.
So as I said, do not tell them what you can and can't do. You don't need to do anything. There is no obligation for you to tell them what your max purchase price could or would be. So you're better off figuring out what your max is for that property. So, use price guides, use comparative sales. Most of the time, what people have got to acknowledge is a price guide is kind of useless. If the price guide is saying 750 to 800, you're not going to be able to offer 750 and get it. Yeah. Not in this current market. Maybe in a market that's declining, offers are coming in under guides, but most of the time what I'm seeing, especially in Newcastle, Lake Macquarie, Maitland areas, is the price guides are always under where it sells. So
by a long shot.
By a long way. So that's something to consider as well. So if you're looking for something for 750, don't look at properties that have a guide starting at 750.
Compare similar properties in the sold section of realestate.com. Go to the sold section and have a look what similar properties are actually selling for, not what the price guide is.
Yeah. There's a lot of free tools. I don't know if CoreLogic's free, but there's a few that, like Price Finder, a few different systems where you can type in the address. It'll give you an estimated value of that place. Take that with a grain of salt. It's not always accurate. It doesn't take into consideration any improvements to that house. It's just a 4-bedroom homes in that area generally sell for this amount. So it is something to consider though, looking at some tools. If you do have a Another way to obviously avoid both of these is a buyer's agent. Really the buyer's agent isn't in this podcast today, but yeah, I'm still recommending that, especially for first home buyers. A lot of buyer's agents will offer just a negotiation package as well. Mm-hmm. So you find the place and you go, can you please negotiate, or go to auction or whatever it is. A lot of the time that's not a huge investment, but you're going to save that by not being emotional.
Yeah, they normally pay for themselves a few times over.
Yeah. One thing, a freebie that I'm throwing in here, which just come to my mind, I had a client, a first home buyer, recently purchase off-market. Off-market to me would indicate that there's no competition. The thing's just popped up off-market. Would you like to make an offer? My client made an offer. All of a sudden, there was 2 other buyers.
There always is. And
that's not, how is that off-market?
Yeah.
It couldn't be any more on the market. You've got 3 buyers interested in buying this joint. The only thing that was missing was it wasn't listed on realestate.com.
Yeah.
So all of a sudden my client was in this bidding war, this offline bidding war, and in my opinion paid a lot more than the place is worth because it was off market. In my opinion, off market isn't worth the paper it's written on. It's a good way for people to try and see where a place is or what a place is worth before it goes to the market. In my personal opinion, I'd prefer wait until it's on the market and see what everyone else is putting their offers in at. If it's sit there for 6 weeks, you know that they're probably asking too much.
Overpriced.
So that was a freebie in there. Older homes. So this is probably one that I see quite a lot where your budget will allow you to buy a 50-year-old home, but you're going through there expecting it to be of the same condition of a 10-year-old home or even a brand new home. It's something to consider when you are looking. You're going to have some issues with older homes. And where that sort of mixes in is when you take dad through that, hasn't bought a home in a long time. He comes through and he's taken the piss out of everything.
He's got his tape measure, his marbles, his flashlight.
Yeah. Yeah. I built this piece of shit. I get it. Dad, mum, uncle, whoever it is, he's just trying to help you out. But at the same time, you're not going to get that perfect house.
Yeah.
Try and buy something in an area that's going to have good potential growth. That old saying of buy the worst house in the best street or the best suburb, it actually stands well.
It's true. And proper building and pest will always pick up a lot more than your dad with his 100%. Flashlight will.
And that's the next one. So basically, in New South Wales, I'm not sure about other states, but in New South Wales, a lot of real estate agents will offer a pest and building report that has been generated by them or by their preferred partner. Look, a lot of pest and building companies will say they're legit, we wouldn't risk our license and all that sort of stuff. But I have a real life experience myself where I was going to buy a house, I don't know, maybe 4 or 5 years ago now, and the pest and building report done by the real estate agent basically said it had a few things on there, a bit of moisture ingress into under the house and some recommendations for that. But what it didn't mention was that the front of the house had actually sunk 2.5 inches and was going to be over 100, because it was a 2-story house, it was over $150,000 worth of repairs needed. That I found out from the inspection report that I paid $500 for.
Yeah.
So whether that's a coincidence or not, I don't give a shit. I saved myself a lot of money by getting that $500, $600 report or whatever it was.
And do your research. Don't just Google building and pest and book the first one.
No. Well, I think you mentioned the other day that to be a pest and building inspector, I think it's an online course.
Yeah, don't quote me on it, I think it's 2 weeks. An online course, couple of weeks. It's not hard to get the qualification.
My pest and building inspector that I've always used, he's an ex-builder. He's a qualified builder. So, and then he just did the pest add-on to that. So do your research on someone that actually knows what they're doing, not someone that's just done a 2-week course has popped up somewhere. Now, the last one is probably one of the big ones I see is buying with friends. It sounds like a good idea to start with, but I've seen these go to shit real quick. I told you a story recently. Sorry, it was a couple of years ago now, or maybe 4 or 5 years ago. I had 2 girls, clients, buy together, and unfortunately, girlfriend A came home from work a little bit early one day and found girlfriend B in bed with boyfriend A.
Yep.
So
not ideal.
You can do the maths, and all of a sudden, this house had been purchased off the plan. So it was two friends that had bought off the plan. Back then, there was no stamp duty because it was over the threshold.
Mm-hmm.
So they paid stamp duty, they paid LMI. There was none of those schemes available at that time. And then by the time they went to sell, that was it was about 6 or 7 months after they'd moved in. And they hated each other, obviously, so they wanted to sell. They actually had I think it worked out, it was going to literally that whole process with the capital growth, it was a couple of $1,000s out of pocket.
Yeah.
The whole experience, they lost their deposit, everything was gone.
And it could be much worse. That's probably a good outcome.
Yeah.
So,
well, if she hadn't come home early that day, yes, the long-term effects would have been more. But there's other ways you can do this. So, I know that CBA offer something that's called a shared equity or a property share loan. So, majority of them when you go into a home loan with a friend or a family member, it's both names for the entire loan. That's it. It is what it is. There are some lenders that will do what's called a property share loan where half of the loan is just in your name, the other half is just in my name. So when I apply for finance at a later date, my servicing capacity is only calculated on my half, not yours. So historically, it's combined. So because your half is your half, you can have yours fixed, you can have your variable, you can pay yours off as quick as you want. I can do the same with mine. If you are going to buy with a friend, I would 100% recommend you do something like that so that the finances are separated and you're not linked.
yeah, get it separated for sure.
But that's, apart from that, probably seek some legal advice.
Always.
Because you never know exactly what's going to happen buying with a friend or family member.
Definitely want some contracts drawn up.
So just to recap on what we've covered, the biggest thing that I see obviously is the statements, the gambling, coming through real estate, going through open homes and telling the real estate agent absolutely everything. Don't do that. Other one is looking at properties, and expecting it to be brand new when it's not.
It's your first home, not your last.
First home, not your last home. Don't tell real estate agents anything. And lastly, pest and buildings, and don't buy with your friends. Buying with partners is easier, but buying with friends can be messy. It's as simple as that. But that's it for today. I'm going to throw social profiles up for Isaiah. He's got some cool content on his TikTok and Instagram.
Go check it out. It's probably not what you're expecting.
But jump on there and give him a follow as well. And we'll see everyone on the next one.
Awesome.
Thank you.
Thanks.